Welcome back to the Deep Dive, the essential shortcut to being well-informed.
Great to be here.
Today, we are taking a deep dive into the world of FinTech. And if you've ever, paid a friend with your phone or opened a bank account online, you're already living in this revolution.
You absolutely are.
We've pulled together a whole stack of sources to really give you the context, pinpoint the global players, and I think uncover the surprising history behind how money moves today.
Well, fintech or financial technology, it's a term that gets thrown around a lot.
It does.
And it's often mistaken for just, trendy apps. But structurally, it's really a fundamental shift. It's about using digital tools and data to make financial services more efficient, more accessible, and crucially more personal.
The scope is just huge, isn't it? We're talking about everything from instant digital payments to these huge systemic shifts from things like blockchain and AI.
And open banking, wealth management, the list goes on. It's a field that is constantly, and I mean constantly evolving.
It truly is about that systemic change.
Exactly.
So our mission for this deep dive is, well, it's threefold. First, we're going to trace the surprising origins of all this. Second, we'll map out the big powerhouses, the US, the UK, and the unique models in Asia. And finally, we'll get into the massive impact this all has on finance and really on daily life for people like you. Okay, let's unpack this.
I think we have to start by dismantling the myth that fintech is some brand new idea.
Right. It feels like a creature of the smartphone era, doesn't it?
It really does.
But the technological groundwork was actually laid decades ago. The sources we looked at show the base was built by these really early breakthroughs.
Like what?
Well, think about the 1950s in the United States. That's when the first bank credit cards appeared. That move basically digitized consumer credit for the first time.
And that was followed pretty closely in the 60s by the ATMs in the UK.
Yeah, the cash machines.
Exactly. Now, they weren't digital services like we think of them today, but they were the first major steps in, automating our interaction with money. It was self-service finance.
And then the 70s brought the really key technical leap. The digitalization of stock exchanges like NASDAQ.
Right.
That shift from, people shouting on a physical floor to electronic processing, that created the infrastructure that all modern investment fintech relies on today.
Precisely. So those early steps, they created the infrastructure. But the modern surge, the explosive growth we've seen recently, that was kicked off by two critical events that just happened to overlap perfectly.
The first one, of course, being the 2008 global financial crisis.
The big one.
That crisis just fundamentally eroded customer confidence in the big traditional banks.
It did, and it created this hunger for new, non-traditional solutions. People were just ready for alternatives that felt more transparent, more trustworthy.
And at that exact moment, the technology was ready to deliver.
It was. Advances in mobile computing, the cloud becoming mature, and the huge cost reduction in data analytics, it all just dramatically lowered the barrier to entry.
So you could build a sophisticated financial service without needing, physical branches or these huge, clunky, legacy IT systems.
You got it. And that feasibility, that's what brought in the VCs.
The venture capital funding.
A massive flow of it. Our sources show that this rapid VC investment, plus proactive regulatory experiments like innovation accelerators, that's what really fueled the global wave of startups.
A perfect storm, really. Crisis, tech, and capital.
It was. So if we look at where this modern fintech first took root, the United States really stands out.
Yeah, as a major driver, mostly because of the sheer scale of its market and that deep investment culture.
You see it in the companies that redefined how we pay, borrow, and invest.
Right, the foundational ones. PayPal for online payments, Stripe building the infrastructure for businesses.
And Square, which is now Block, completely changed point of sale for small businesses.
And it's still going on. You've got newer players like Robinhood changing who can access investing.
Or Coinbase, which established a huge public beachhead for digital assets.
Yeah.
But we do have to ask, hasn't this democratization, especially through these easy access apps, introduced some new risks, around retail investor volatility and platform stability?
That is a crucial point. The sources suggest there is always a trade-off, isn't there, between speed and stability when you open up complex systems.
There is.
But the U.S. market got even duper when the big tech firms, Apple, Google, Amazon, jumped in with their digital wallets and embedded financial services. Their reach is just enormous.
Okay, so let's move across the Atlantic. The UK, and specifically London, it became a global leader by taking a very different path.
Not market size, but Regulation.
A distinctly regulatory path, yes.
This focus is a huge differentiator. The UK's success relied so heavily on supportive regulation, particularly the Financial Conduct Authority's regulatory sandbox. Can you maybe walk us through what that actually means?
I can, yeah. So think of the regulatory sandbox as a controlled testing environment. It's a framework that lets fintech companies test new products in a live market, but under really strict supervision.
So if something goes wrong,
If the product fails or creates some unexpected risk, the damage is contained. It allows for safe, rapid learning.
and that flexibility is what allowed the UK to champion open banking, which is just a crucial concept.
It is. It relies on secure APIs, application programming interfaces, that let you, the customer, securely share your financial data with third-party providers you trust.
So the API is like a secure digital mail slot, right?
That's a great way to put it. It allows, say, a budgeting app to read your account balance, but only if you grant permission. The data becomes useful, but your actual account stays safe.
And this environment directly led to the rise of the digital or challenger banks.
Monzo, Starling, Revolut, they all grew out of this. The UK basically created a blueprint for how thoughtful regulation can actually accelerate modernization instead of stifling it.
Which brings us to a really crucial divergence. When you pivot to Asia, the models are driven less by existing infrastructure and more by, well, the sheer necessity of scale and financial inclusion.
And you have to start with India.
India is maybe one of the most powerful examples of this globally. Their success is built on a specific trio of systems, often called the India stack.
That combination is just fascinating. You have the Aadhaar digital ID system, the UPI unified payments interface for real-time payments, and then just widespread mobile phone adoption.
And the fact that UPI is built on this open, interoperable architecture is the key, isn't it?
It's everything. The scale that results is just unprecedented. Apps like PhonePe and Paytm now process billions of transactions a month.
Billions.
They're delivering instant, low-cost digital payments to millions of people who were previously just completely excluded from formal financial services.
Now, you contrast that inclusion model with China, which just redefined consumer behavior through the super app ecosystem.
Right. Companies like Alipay and WeChat Pay, they didn't just offer payments, they integrated everything. Payments, lending, insurance, wealth management, lifestyle services into single platforms.
That integration makes the service totally indispensable. QR code payments became the default for, well, for everything.
From buying groceries to taking the bus, yeah.
Yeah.
China became the global reference point for ecosystem adoption, showing how you can make finance almost invisible by just embedding it into daily life.
And beyond those giants, you also see these specialized hubs playing key roles.
Singapore, for example, it acts as a strategic regulatory hub in Asia, known for granting digital bank licenses and taking a very balanced approach to risk.
And you can't forget the pioneers. Kenya's M-Pesa enabled millions to transact using basic phones long before smartphones were a thing.
Proving you could leverage existing telecom infrastructure. And even Brazil's PIX system, which only launched in 2020, is already a global case study for rolling out instant nationwide payment rails.
So if we step back for a second, why did all this grow so fast everywhere?
Well, it comes down to solving these really deep embedded problems that the legacy systems just couldn't handle. Traditional banking was slow, it was manual, and it was costly, especially across borders.
Exactly. FinTech meets that fundamental customer expectation for a frictionless, instant experience. Moving your finances from a slow branch process to an intuitive app, that's the shift the market was waiting for.
And if you connect this to the bigger picture, the impact touches everyone. For consumers, it's more convenience, faster payments, and access to saving and investing no matter how much money you have.
For businesses, FinTech is transformative. It allows for immediate cash flow reconciliation, better data analysis, and much easier cross-border payment management.
It just improves their efficiency, fundamentally.
And what about institutions and governments?
Well, for them, while the competition is tough, the potential for collaboration is huge. Tech providers can help banks modernize, and the transparency in digital finance supports government goals like financial inclusion.
And this shift is only speeding up, right? Because the underlying technologies are all maturing. This is where it gets really important for you, the listener, to understand what's coming next.
Absolutely. Open banking frameworks are giving customers more control over their own financial data that forces companies to compete to deliver better, more personalized products.
And the growth of AI and machine learning it's huge. It's moving way beyond just basic fraud detection.
Oh, yes. We see AI assessing creditworthiness not just on old credit scores, but using real-time patterns. This allows for much more nuanced risk scoring, which is vital for lending to people who were previously unbanked.
And ML is automating compliance checks, delivering those personalized insights we mentioned.
It can even catch issues before the customer even knows there's a problem.
And then, of course, there's blockchain, which is reshaping the whole conversation around global trade and identity.
And it's not just about cryptocurrencies.
Not at all.
Right. For instance, blockchain is being explored to streamline incredibly complex international supply chains. By creating these shared, unchangeable ledgers, it reduces intermediaries, it speeds up payments, and it enhances trust in transactions that used to take days or weeks.
So what does this all mean? We've seen how a financial crisis and new tech came together to launch this modern era. We've traced the different paths as the US, the UK, India, China.
It's clear that FinTech isn't just a passing trend with a few apps.
No, it's a structural realignment of how value is exchanged globally, all driven by data and this demand for instant results.
It's a complete reimagining of the concept of banking itself. And that brings up the big question for the future.
Which is?
If FinTech continues to integrate payments, lending, and lifestyle services into these single, all-encompassing super apps like we've seen in Asia, how much longer until the very concept of a separate physical bank just becomes obsolete?
Replaced entirely by embedded digital services that, anticipate your needs before you do?
Exactly. That tension between the old institution and the new ecosystem. That is the central question for the next decade.
It's a huge question, and the answer is going to affect every single one of us. If you want to dive deeper, we really encourage you to look at the specific regulatory frameworks we touched on, like the UK's sandbox or the tech behind India's UPI model.
There's a lot there to explore.
Thank you for joining us for the deep dive.